Okay. Now, is everything all right?
Yes,
Hello?
sir.
Yeah. So what I was saying is 650 worth of flowers and plants has been sold for 950, for 900. So how much cash the shopkeeper will get? Correct? Hello?
Correct, sir.
650 has been recovered. The cost has been recovered. Extra 250, extra cash has come. That is nothing but profit. So we will write 900 cash in the cash account. So now 1800 is the stall. Flowers and plants 0. Why? Because we sold it. We sold 650 worth of flowers and plants for 900. We got 900 cash. 50 we already had. So 950 is cash. Total is 2750. Okay. Now the capital here, when we see 2500 is still there, but see, you sold 650 rupees worth of plants for 900. So you got a profit of how much? 250. That is retained profit that you have to add to capital. That is a rule, correct? Please tell me now, yes or no. Hamsika and as well as Hoor. Please tell me, did you understand this?
Yes, sir.
Yeah. Now the position what we see is they started the business with 2500, but now at the end of the day they have 2750. Okay, that is due to the profits. Now let us move forward. We are speaking about drawings. See, drawings, what do you mean by drawings? Drawings are nothing but the amount withdrawn by the owner of the business for their personal use. Okay, so drawings are nothing but the money withdrawn by the owner of the business for their personal use. So what is the story here? Since Lisa Doolittle has made a profit of 250, of course they made a profit of 250 from her first day's work, she might want to from the business. See, she made a profit now. So now she wants to withdraw money from the business. She wants to take the money from the business, correct? See, why a businessman would like to take money from the business? See, for every businessman need income for living, okay? And to meet their daily expenses, they require money. Isn't it so? So what Lisa decides is she decides to pay herself $180 in wages. That means 250 is the profit what the business has earned. Out of that $180, she wants to pay herself as wages. Correct? Now, however, $180 is not an expense. Now you will have a now you will be confused here. She's paying wages to herself. So it definitely should be an expense because salary is wages and all are expenses. But very clearly she is paying to herself, not to her staff. Please be very careful, not to her staff. And when money is withdrawn by the owner of the business for their own personal use, that kind of money is called as drawings. Okay. So how will you treat these drawings? I will explain you. So profit. So our $180. So this is what many people do this blunder. What they do is whenever a proprietor or a business owner pays wages to themselves, they consider that as an expense. But that is not an expense. That should be termed as drawings. Okay? Drawings are not expenses for the business. Those are the money withdrawn by the owners of the business for their personal use. Now I will show you the correct effect. Please see here. Now, how much profit did the business did the business make? $250. If Lisa is paying herself wages, she would pay how much? $180. Net profit earned by the business, $70. This is not a right treatment. This is incorrect treatment. Understood? This is incorrect treatment. So what is the right treatment?
Your screen shows again.
Can you see the screen now?
Yes, sir, now it's
Hello.
visible.
Yeah. See, what I'm saying is $250 is the profit of the business. Lisa is withdrawing $180 from the business if in the form of wages or something, because she wants to like she wants to fulfill her financial needs. For that reason, she wants money. Okay. So whenever a owner withdraws money from the business, that is called drawings, but not, it's not an expense. It should not be treated as an expense. So many businesses, what they do is they write their profits in this way, and they deduct the money, okay, from the profits in the name of wages, okay, and they show it as an expense. That is absolutely wrong treatment. Why it's a wrong treatment? Because these wages are not paid to their employees. If the wages are paid to employees, then that can be taken as an expense. But if the wages are not paid to employees of the business, but in the name of wages, the owner of the business is withdrawing money from the business, that is never an expense, that is a drawing. So this kind of treatment, what they are showing here, Lisa being the owner of the business, taking out $180 from the profit as wages, okay, and then you are showing that as an expense in the statement of profit or loss, and then you are showing your net profit as $70 here, is a wrong treatment. This particular wages which is taken by the owner of the business is not the expense for the business, it is a drawing. So what kind of right treatment you have to give? See, this is because any amount paid by business to its proprietor are not treated by the accountants as withdrawals of profit. Okay, that means drawings and not an expense incurred by the business. Sorry, are treated as, not, I just take my words back. Very clearly what I mentioned you, the same thing they are also giving the mention here. This is because why this treatment is wrong. Why the amount withdrawn by the Lisa, which is when shown as wages here, is the wrong treatment, because any amounts paid by business to its proprietor are treated by accountants as withdrawals of profit. So here the money is, like, the amount is paid by the business to the proprietor, Lisa Doolittle. So that should be treated as withdrawals of profit or drawings, not wages or not expenses incurred by the business. So in the case of Lisa's business, the true position is that net profit earned is $250, surplus on sale of flowers. So net profit is net profit less profit withdrawn by Lisa. So this is the right treatment. So what we should do, how we should give the right treatment? We should take net plus 250 surplus. Please tell me. Hello. What
Could you
word I'm
repeat
using
that?
here?
Sir, your
See,
voice is breaking, sir.
I'll tell you. See, I'll tell you what treatment they gave is net profit $250. Just a second, just a second. Yes. See, net profit $250. Okay. Less wages. Wages, they were showing us wages. Okay. Wages for whom? Wages to Lisa. $180. The leftover profit is $70. This is a wrong treatment. Understood? Hello? Hello?
Yes, sir.
Instead of wages to Lisa, what word they should use? What's the word here?
Drawings, sir.
Drawings. Yes. Okay. That is the right treatment. Why? Because it's the money withdrawn by the proprietor for their personal use. Okay. So now leftover profit is how much? 70. That will be retained in the business itself. That's what. Now let's go for the next one. Next explanation. Now see, I'm repeating everything. Please understand. We start, see, everything is here. We already are continuing the example. Stall 1800 is with us in the business. Flowers and plants we sold. Okay. We made a profit of how much for flowers and plants? 250. Okay. That is added to the capital. And now how much is the money withdrawn by the proprietor of the business? $180, correct? So $180 would be deducted from the cash account. Okay. That will decrease the cash, and $180 will also be decreased from the retained profits, which will show the profits to the tune of $70. That means drawings has two treatment. Drawings should be deducted from the cash. Okay, the amount which you are withdrawing will be deducted from the cash. So we have cash how much? 950. 180 I'll subtract. Okay, this is one treatment. And I'll be left over with 770 cash. This is in the asset side. In the liability side, I have capital, retained profit. That means the profit which a business earns, okay, they keep it with themselves. They keep it with themselves. That kind of profit is called retained profit. So my retained profit is $250. My retained profit is $250. Okay. It's a part of capital only. So my capital was how much? 2500. My retained profit is how much? 250. And from this, I'll be deducting drawings 180. So from 250, if I remove 180, 70. 70 is my profit now. Okay. That means 250 profit I earned. From that, I removed 180 for my personal use. Okay. This is a book entry. This is called book entry. But physically, from where the money will go? Cash account. Please tell me yes or no.
Yes, sir.
So this 180 which you are subtracting from 250 is only a book entry. But actually or physically the cash will go out from cash account. Okay. Because this 180 is something which is affecting two accounts. Which two accounts? One is cash account, because physical cash should go out from this. And one is your retained profit account. So I will pass a journal entry for this. Please understand. See, whenever you your retained profit is getting money is getting subtracted from retained profit. So we will put that is in form of drawings. So we'll put drawings in the debit. What we'll do? Hello. Hello.
Debited, sir.
Yeah. Why we put drawings in the debit? Because drawings account is always a debit account. What is that?
Debit account.
Debit account. Okay. So drawings, if we write in the debit, the actual meaning of that is retained earnings we are debiting. What are we doing?
Retained earnings.
See, retained earnings is an income account, and income account is always credit. Na? Increase in income is credit. Decrease in income is correct.
Yes, sir.
Increase in income is credit. Decrease in income is debit. So since your income, your retained earnings or net or retained profit is your income, it is getting debited. That's the reason why we put drawings in debit. And which account is getting credited here, or which account is decreasing in asset side? So whenever cash account decreases, it is, please tell me. It is what?
Debited, sir.
Credit. Yes. Okay. So now still what we are seeing is when we do the total 1800 plus 0 plus 770, we get 2570, and here 2570, 2570. And what we see, the LHS, which is asset side, is matching with capital and liabilities total. Okay. Please have a look at this. Then we will move forward. The example will continue, and we will again see it's a very big example. It will continue. It's a very big example. So you please see till here, then I'll move forward. Please ask me if you have any doubts. Okay, let's move forward. Following now. Okay. Now we are continuing the example. See, the next market day is on 10th July and Lisa purchases more flowers and plants for cash. So whenever there is a purchase, what's the entry? Purchase to cash. Why it is purchase to cash? Increase in expense is debit and decrease in asset is credit. Okay. So which two accounts will be affected? Purchase account and cash account. That means cash account will decrease and purchase account will have increase in expense. That means already you may have done some purchases. To that you are again adding more purchases. So that is increasing your expense, correct? And decreasing your cash. Now, so what did they do? They purchased more flowers and plants for cash at cost of $740. She is not feeling well because of heavy cold, and so she decides to accept help for the day from her cousin Ethel. And she has agreed to pay Ethel $40 at the end of the day. So that is expenses for Lisa Doolittle. Why? Because she is paying wages to her staff. Okay. So that is expense. But if the wages are paid to Lisa Doolittle, that is drawings. Understood? Because it's proprietor. Now, trading on July 10 July was again very brisk. Lisa and Ethel sold all their goods for 1100 cash. That means they bought the goods for 740 and they sold it for 1100. Lisa paid Ethel her wage of 40 and drew out 200 for herself. Now the treatment is clear. 200 Lisa has withdrawn. That will be affecting which account? The retained profit or capital account. We will deduct from there, and as well as we'll deduct from cash account because the entry is drawings to cash. Correct or wrong? Please tell me. And drawing there mean what? Debiting the retained profits. Okay. Now. So now let's see what is happening and what we are doing. The stall we had is of 1800. How much worth of goods did Lisa Doolittle purchase? 740. Lisa Doolittle purchased these goods for cash. So goods here are flowers and plants. So the business got flowers and plants of worth 740. And that much amount of cash has been subtracted from the cash account. Why? Because that much cash has gone out physically. So now the cash left over is 30. Are you understanding? Please tell me. Hello.
Yes, sir.
Yeah. Now, what is happening here? We'll make a small profit or loss statement to understand the profits for the year. So now 740 worth goods have been purchased. That goes under COGS because purchase is the part of COGS. some amount has been paid to Ethel as wages. That is $40. $40. So total expenditure has been of 780, and that means whatever the expenses is here, how much we are showing 780, and 740 worth of goods have been sold for how much? 1100. So now 1100 is the sales, 740 is COGS, that is purchases. Purchases are shown under COGS, you already know, and 40 are wages. From revenue, when we deduct all the expenses, we get profits. So our profit is 320. That will be added to capital account. So our capital is how much? 2570. Our profits earned is 320. Okay. And let us see what is happening here in the cash account. Flowers and plants we bought of how much? $740. We sold it now. When we sell this entire flowers and plants, you don't have any flowers and plants left over with you. That means $0. You sold this $740 worth of flowers and plants for how much? 1100. So you will show in the cash account or not? Please tell me. Hello?
Yes, sir.
Yes, sir.
Yeah, so $30 cash was already there. 1100 worth of like cash they got because they sold flowers and plants, and $40 they paid. Like what did she do? She paid as wages to Ethel. So since you have taken the wages in the statement of profit or loss, of course that's a expenditure. So here we show that as an expense in the statement of profit or loss, but physically you are paying cash as well. So from cash account 40 is going. So the entire cash left over with you is 1090, and 320 is the profits you made, correct? Now I will give the treatment of withdrawal. 200 Lisa Doolittle has withdrawn from the business. So we'll give treatment for that. So what will happen? Everything will continue as it is, but 1090 we have the cash. From that $200 will be subtracted because Lisa Doolittle has withdrawn $200 worth of cash. So physically $200 of cash has gone out. And since you already know, we have to also give the treatment in the capital and liabilities side. What kind of treatment we have to give? We have to subtract this from the retained profits, correct? Why? Because I already told you drawings to cash is my entry, whereby cash is decreasing and drawings is debit account. Here I am literally debiting my retained profits. That means decrease in retained profits. So I'll be deducting $200 and leftover retained profits is 120 with me. Okay. And again, when I just total them, what I see is these two accounts are equal. Okay. Please have a look at this. I'll move forward. Okay.
Thanks, sir.
Yeah. Next. Now we are going into the next part, payables and receivables. That is also something which can be expected in a business. Okay. Let's continue the Lisa Doolittle example and understand these payables and receivables. We are almost coming into the end of this chapter. That is this topic. Okay, let's wind up now. See, there are some chain of events happening. So please understand. Now, the example of Lisa Doolittle's market stall is continued by looking at the consequences of the following transactions in the week to 17 July 2016. So till now we saw the situation at the end of 10th July. Now we are seeing what is happening between 10th July to 17th July. Lisa Doolittle realizes that she is going to need more money in the business, and so she makes the following arrangements. She immediately invests a further $250 of her own capital. So here what is coming in the business? Cash. That is debit. Increase in cash or asset is debit and capital is credit. So she's even infusing. That means she's sorry, investing $250 in the business again. So add that amount in the cash account as well as in the capital, because capital is credit. So that means always whatever related to capital will be added to the capital in the credit. Okay, and whatever related to asset, if it increases, it always is debit. Okay, increase in asset is debit. We'll put those two things here. So we started with stall of 1800, flowers and plants they sold, it seems, and something, just a second, more information will be there. So 250 is the additional capital which has been introduced in the business by Lisa Doolittle, and cash account will also have, see, cash account already has 890, correct? I add 250 to this. Okay. Don't worry about 750. Some information is there. We have to add more amount. So that will make it 750 and make it 1640. Now, we closed with 890 cash, correct? Yeah, we closed with 890. Now what is happening? She persuades her uncle Henry to lend her $500 immediately. Uncle Henry tells her that she can repay the loan whenever she likes, but in the meantime, she must pay him interest of $5 each week at the end of the market day. They agree that it will probably be quite a long time before the loan is eventually repaid. Why? Because Lisa Doolittle knows that $500 is a big amount and she will take some time to repay. So she agrees for paying the interest. Now, this $500, which is a loan, what's the entry? Again, cash debit. Why cash debit? Because loan is coming in the form of cash into the business. Okay. How? See, if you take a loan, someone gives you cash in your hand. So first what you'll do, you'll deposit that money in your cash account. So your cash account will increase. So increase in asset is debit. So again, 500 I'll put in debit. Okay, and loan, since the cash here what you're taking from someone is a liability for you. Why? Because it's a loan, you have to repay. That increases your liability. So increase in liability is credit. So we write loan account in credit 500. Okay, so we'll give the treatment here. So increase in loan is increase in liability. So we put it in the loan, and it is also increasing the cash, because cash to loan is the entry. So we add 500 to cash account. So now this becomes 750 and 1640. And when we see the totals of this two, and as well as this, that means if you add 2940 with 500, you still get 3440, which is equal to your asset side. Now, please have a look at this. We'll move forward. Hello. You're looking now?
Yes, sir.
Yeah. Shall we move forward?
Yes, sir.
Yes, sir.
Yeah. Now, next step. See, what happens is, again, next, when she decides to buy a second-hand van, flowers and plants from her supplier and bring them to her stall in the. So now, since she's finding it difficult to goods and all every day, like with some other transport, she thinks of buying a van. Okay, and she finds a car dealer, lorry loader, who agrees to sell her a van on credit for $700. So now Lisa will buy a van, and when van is coming into the business, it will increase the asset account. So van debit, okay, because increase in asset is debit, and she will be paying cash, so it will decrease the cash. So to cash, one asset account is also decreasing because cash is going out, so it's credit. Okay, so decrease in asset is credit. One asset account is increasing, another asset account is decreasing. Okay, and Lisa agrees to pay for the van after 30 days trial. Okay, now let's account. So now 700 van has come, and the money she hasn't paid immediately. I'm extremely sorry. I did not see the next step. The next step was Lisa agrees to pay for the van after 30 days trial use. That means it is not cash she's paying, but it is a payable for her. What is that? Hello? It's a payable for her, correct?
Yes, sir.
And that is increasing her liability. So increase in liability is credit. So 1800 worth of stall she has. She bought a van for 700. She has a cash of 1640. She already has a capital of 2690, and there's an additional capital of 250. And she already has a loan of 500, and again there is a payable of 700 for the van, okay, which she wants to pay after taking a trial of 1 month. Okay, now next thing. So till now, again, if you total this all, you get this, and when you have this, this is the amount, this is the amount, and when you add this to, so equivalent to 140. During the week, Lisa's uncle George telephones her to ask whether she would sell him some garden gnomes and furniture for his garden. So he wants to buy. Lisa tells him that she will look for a supplier. After some investigation, she buys what Uncle George has asked for, paying $300 in cash to the supplier. Uncle George accepts delivery of goods and agrees to pay $350, but he asks if she can wait until the end of the month for the payment. So Lisa agrees. So here what is getting created? Receivables. Correct or wrong? Yes? Yes or no?
Yes, sir.
Yeah. So now 1800 worth of stall she already has. She has a van, and Uncle George wanted something which Lisa Doolittle has purchased and sold to Uncle George. She purchased it for 300. She sold it to Uncle George for 350. But this money she hasn't got because Uncle George has said that he wants to pay it afterwards. So Uncle George is a receivable for the business. That means the money is supposed to be received. But $300 worth, $300 worth of cash has gone out from the business. That is understood fact. Okay. So 1800 stall, van 700, receivable 350. Why receivable 350? Because Uncle George will pay it in the future. So 350, and even though he'll pay in the future, he paid money for buying the goods. So that is 300. Okay, so that is subtracted from the cash. Just a second. Okay. So this is the case, and 350 worth of like 300 worth of goods which Lisa Doolittle has purchased. She paid for buying that. Okay, that means this is Lisa. She bought the goods whatever Uncle George required by paying $300. So cash has gone out from Lisa Doolittle's account. But what has happened is, since she paid $300 and she purchased those goods, she sold it to Uncle George for $350. Okay, but she did not get any cash. Okay, so Uncle George's like account like balance what George is supposed to pay to Lisa Doolittle, so that is receivable. So she should. Lisa Doolittle has sold the goods to Uncle George and she made a profit of $50. It's a secondary matter that the money will be received in the future. But right now, the goods have been bought for 300 and been sold for 350. Okay. Money will be received in the future. That's a secondary matter. But it's a book entry. In books, the profit has to be shown. So, capital still 2690. Additional capital, we already know the story. And the profit 50. And this two we already know. Okay. So, this is the case. Next. Lisa buys flowers and plants costing 800. Of these purchases, 750 are paid in cash with the remaining 15 7 days credit. Lisa decides to use Ethel's services again as an assistant on the market day and agreed to pay a wage of $40. Now, let's go with this. So now what Lisa has done, she has purchased goods on what? Hello? On cash. Okay. So she has purchased goods worth like 800. So Lisa Doolittle has purchased goods worth of 800, in which 750 she made the payment and $50 she said she will pay in the future. So it's a cash account to get affected. That means it is going to decrease. And here one account is getting created, that is payables account. Okay. So now 1800 worth of stall we van we have, flowers and plants have been purchased of $800. Okay. But in that $800, whatever the purchase has been made, two kinds of purchases we see. One is cash purchase and one is credit purchase. So cash purchase is how much? 750. So 750 from cash account will be deducted. Okay. And receivables is as it is. And 50 is credit purchase. So that will be shown under payables here in liability, and rest everything is intact and as it is. Okay. And then when we add all of this, we get this much. When we add this two, we get 4240. That is equal to this particular balance. Okay. Please have a look to this. We'll go for the next one.
Done, sir.
Okay. Okay. Two minutes, huh? 2 minutes, just wait. Now, after market trading, okay, now we have to see the detail. Yeah. On 17 July, Lisa succeeds in selling all her goods, earning revenue of 1250 all in cash. She decides to withdraw $250 for her week's work. She also pays Ethel $40 in cash. Okay. So now what Lisa does is she is selling all her goods. Okay. And that will earn her a revenue of 1250 all in cash, all in cash. So she will be putting that in the cash account. She decides to withdraw this much for her week's work. That's drawings again, you know. She also pays Ethel this much cash and she decides to make the interest payment of Uncle Henry for the next time she sees him. Okay. And we shall ignore any van expenses for the week for the sake of relative simplicity. So let's go ahead. So she has how much worth of goods? 800, correct? Flowers and plants. She's selling it for 1250. So we'll put it here. 1250 is the revenue, 800 is the cost, wages 40, interest payment 5, the total expenses this much removed, we get profits, and you know from that she is withdrawing 240, so retained profit is 165. So stall, van, flowers sold, receivables is still there, cash 1250 she got, 40 she paid for wages, she withdrew 240, so this much is cash. This is as it is, this is as it is, as it is, retained profit we got 165 here, as it is, as it is, as it is, and she made she has to make the interest payment now. She decides she will be paying that when she sees Uncle Henry, so it's a payable again. So this total is this, and this two again added up this. Okay, so all like this will match with the this total. So now this is what we have like in the accounting equation. We have done this and we have seen every step. We have done this question. Like we have seen all the scenarios, all the situations, all the steps, and we found that every time these are matching. Okay, so that is what we like the accounting equation says us or teaches us. Fine. So I want you to go to this problem once again, do to this video again, read the question, solve this question. Fine. And next class will start next chapter called inventories. The seventh chapter, sorry. Okay. Thank you. Thank you all of
Thank you, sir.
bye. Thank you.